listing is mainly in New York on the NYSE. The market cap of the company is about $200 million US, and we're getting ready to put a new PGM mine into construction in South Africa. So the asset was discovered in 2011, and we've been working on the engineering and permitting and financing as we've moved the asset along the curve. I was actually just in Miami at the BMO Metals and Mining Conference, and the term Tier 1 mining asset seems to be used by almost every company that presents these days. And when Mark Bristow termed that phrase, the idea was that the asset would be greater than 10 years of production, 500,000 ounces of annual production, and lowest quartile or half quartile in the industry. So there's not a lot of assets that meet that test. This asset, based on a 2019 feasibility study, has just under 20 million ounces in reserves, close to 40 million ounces in measured and indicated ounces, so it's a real monster. 45 years of mine life and a cost that would make it one of the lowest cost platinum palladium mines in the world and in South Africa. So we're quite proud of the asset, and getting a new mine built is never easy, but we're slowly making our way there. For those of you that are not familiar with these metals, they primarily come from South Africa and Russia. Our asset is on what's called the northern limb of the Bushveld complex, and it's just on strike with two major mines. One is the Mogalakwena mine, which is Anglo American Platinum's largest, most profitable asset in their entire inventory, and the Ivanhoe Platreef project, which is Robert Friedland's sort of secondary asset after their copper project in the DRC. These projects are different than the traditional platinum mines, given that they're very thick. Our asset is 100 meters thick in some areas. 40 meters is the minimum cut that we'll be making, and it's a mix. It's a polymetallic blend of platinum, palladium, rhodium, gold, nickel, copper. And because of the mining method and the nature of the ore body, you can use very highly mechanized, low labor mining methods, and therefore the cost is quite low. In terms of the metals that we're producing, it's a basket, primarily palladium. There's been a lot of discussion about the palladium market, given what's happening in Russia with Norilsk being the largest producer. We are seeing people moving away from Russian supply, and we think that we will have strong prices here in the medium term at least. And the platinum, rhodium, gold, and nickel copper credits give us a very robust basket, very diversified, and we're somewhat sheltered from commodity risk in any one of these single commodities. The prices for PGMs have been volatile. We have seen them roll over a little bit in the last few months. I think that one of the big issues around demand for these commodities is the electrification story. So if you believe that the entire world auto fleet is going electric, then you probably don't want to own these metals. We differ in our view, and we're partnered with the Japanese government and Hanwha on our asset, and they have a view, particularly with Toyota, of a blended auto market powertrain where you're going to have electrification, you're going to have hybrids, you're going to have fuel cells, and you're probably going to have gasoline cars around for quite a long time still. And so palladium and platinum are the key metals for autocatalysis and pollution control in most cars today. And so the basket price for our commodity was about $1,400 when we did our feasibility study in 2019, and that price has been relatively steady for the last several years. We're currently working on a $20 million program to prepare for construction. We're updating our feasibility study from 2019. We're doing some definition drilling for geotech purposes. This will be a decline project, very shallow, relatively quick access. And as part of that $20 million program, we are also, as I said, updating the feasibility study for things like prices, exchange rates, and we're not really looking at changing the mining itself or the mining scheduling in any great deal. Back to the ownership. So we discovered this project, as I said, in 2011, and the first investor was JOGMEC, which is essentially the Japanese government. They put up the initial $10 million and earned into an interest. We did bring in Impala Platinum, who's one of the big South African operators. They purchased their 15% interest for $30 million back in 2017. So they're quite involved in the design and the technical construction of the asset and the plans to build it. Jogmex sold a portion of their interest to Hanwha a few years ago, which is quite traditional for the Japanese government to do. When they make a discovery, they'll often bring in one of the trading houses in Japan to facilitate the metal marketing of the asset. So Hanwha controls 100% of the metal marketing rights. So when the mine goes into production, they'll be able to purchase 100% of the production at market prices. And Impala owns a 30-day right of first refusal on the concentrate offtake. So the way it works in South Africa, junior companies will produce a concentrate product and then sell it to a local smelter. And so we're currently negotiating with the 4 smelters in South Africa for a definitive offtake contract, and Impala is one of those parties involved. Sorry about that. I won't go too much into the geology, but it's basically 2 mineralized zones stacked on top of each other, the T zone and the F zone. You can tell by the size of these images here. The F zone goes for 8.8 kilometers. The T zone is at 4.8 kilometers, and the mineralized zones dip at about a 38 degree angle. So this has been quite well drilled. There's over 300 boreholes in the deposit, and we've gone all the way through the PEA, PFS, DFS engineering process. So there's not a lot of mystery behind the actual project itself. And you can see on a plan view, the infrastructure plan, obviously South Africa's challenge with power. I'm sure we'll get some questions on that. We're not in a position right now where we require production scale power. And water is also something that this area you need to be quite careful about. But we've worked through engineering parameters on both of those issues. And I talked a little bit earlier about the mining method and the thickness of the deposit. So this is what's known as long hole stoping, long hole open stoping, which is quite new for South Africa. Most of the mines there are generally narrow vein deposits, which are mined with a lot of labor. So this will be quite a different asset. The Ivanhoe project is also using a very similar mining method as well. It's a lot safer and a lot more productive. I'm sure everybody's seen these cost curves for whatever metal you're looking at. This is a cost curve of the Southern African PGM mining industry. And the Waterberg in the 2019 design would be the second lowest cost project behind the Mogalakwena open pit. And again, it's all about the productivity around mining thickness and the ability to move tons very quickly and move a lot of them in a very short period of time. On the ESG front, we have received our mining license from government. So in 2021, we were given our mining right by the DMR in South Africa. And the process in South Africa, like most jurisdictions, involves quite a bit of social labor community consultation. So we've completed all of that community work, and our environmental impact assessment was approved by government as well. So there's no other permits required to begin construction of this mine. And that process was actually quite efficient. It took about 3 years in total. And I've seen some mines in the United States and Canada where you're looking at 10 years plus in order to get a new project permitted if you can. So, given the optics around South Africa, it is actually quite a good place to operate from a regulatory point of view. And we've retained a group out of the UK called Digby to give us an independent rating on our ESG work, which is, is available on our website if anyone wants to take a closer look. Just some quick numbers from our definitive feasibility study in 2019. It was completed by Stantec and a group of other South African engineering firms. I've gone over some of the basic numbers in the study. I think the key thing that everyone's looking at in terms of our investors and potential shareholders is the capital required to build the project. So in 2019, we were estimating $617 million in peak funding. And for those of you that are not familiar with that number, it's the total capital required till first production comes out of the ground. So even though you're not fully built, the revenue that you're generating at that point will offset future capital cost. The total capital to build a project is just under $1 billion US. And so our plan is to raise the $617 million roughly. And we've said publicly that we have essentially 3 components prepared and ready to go. The first one is a $300 million gold stream. And we're very close to being able to announce that transaction. It's with one of the big 3 streaming royalty companies that most of you would know. The second piece is a debt portion, which we're working on through the Japanese government. So given that JOGMEC is a significant shareholder in the asset, and the current situation with Russia and Ukraine, they've publicly said that they no longer wish to purchase metal from Russia, and they've fast-tracked their involvement and investment in the Waterberg project as a result. So we've made some public comments about that, and the Japanese have also made comments. We expect to have more clarity on that in the next 3 or 4 months in terms of being able to publicly announce a potential transaction. And the remaining capital would come from equity from the partners in the project. So between ourselves, Impala, and the Japanese, there would be about a $200 million equity requirement, of which half would fall on our shareholders, so about $100 million. And I'll show you who the shareholders are in a second. So we think we're in pretty good shape on the equity front. I talked a little bit about productivity. I won't go too much into this graph. It's actually a little bit maybe too involved, but what we're seeing in South Africa is that the traditional platinum mines are generally beginning to close slowly but surely. And the main reason is that they're quite labor intensive, with platinum now trading below $1,000 an ounce. A lot of those older shafts are becoming uneconomic. And when you look at a project like Waterberg, which can produce 30 to 40 ounces of PGMs per person, and a traditional platinum mine might produce between 1 and 5 ounces per person on a monthly basis, the productivity factor becomes a significant consideration. I talked about the 3 pieces of the project finance. The key that unlocks that is an offtake agreement. And I alluded to the fact that we were working on a concentrate offtake with one of the four smelters in South Africa. We continue to work on that. The other thing we're doing is we are funding a feasibility study to build our own furnace in South Africa that would actually beneficiate our production. And so that process is underway, and we should have a full study completed by the end of this year. The ideal outcome would be a third-party offtake with an Anglo-American, an Impala, Sibanye, or Northam. But if we can't get a concentrate offtake, we'll have to find a secondary solution. And the last slide is just a quick timeline. We have not begun the construction process formally. There has not been a construction decision made by the joint venture. It all relies on the offtake agreement and funding package. But you can see from the timeline there, you're looking at about 10 years until from start to finish in terms of getting to commercial production. So these are not assets for the faint of heart. And again, 10 years of construction for a 50-year mine life, there's a significant value uplift once you're funded and you're through a part of that construction process. One of the things we have been working on is a secondary business. When we started looking at the battery market and the potential impact on the platinum and palladium market, we decided to make an investment with Anglo-American in lithium battery research using platinum and palladium. These are not metals that are traditionally found in a battery, and most people will tell you that they're too expensive to use as battery materials. We did find a group at Florida International University that was doing some early stage research on lithium sulfur and existing NMC chemistry using these metals to enhance performance. And so we're about $4 million into that project, and we expect to have a pre-commercialization strategy ready to announce some point towards the end of this year. And this is, again, being funded by ourselves and by Anglo-American Platinum jointly. So that's the story. Just to wrap it up on our capital markets, as I mentioned, our main listing is on the NYSE. We have 3 cornerstone shareholders One is a South African listed company called Hoskin Consolidated. They own 26% of our public company. And then we have Franklin Templeton in San Francisco at 15%, and the Copernic Group in Florida at about 9%. And the market cap as of today is about $170, $180 million.